Hey guys, welcome in this video. I hope that all of you are doing great. So in this video, I'm going to share with you guys three things that you can implement right now into your trading that will actually help you to get better results. So we will not talk about mindset tips or perspective and stuff like that. We will go literally into trading directly, and we will look at things that will actually make a real difference if you actually do them, and you guys will see that it should be pretty helpful. So I'm really excited to share all of this with you. So as always guys, just before that we start, please leave a like under the video. I would really appreciate it, and make sure as well that you are subscribed to the channel if it's not already done. And with that being said, let's get right into it. All right, so the first thing that I want to share with you guys is something that I started to do a couple of years ago, and it actually made a pretty big difference into my trading. And that is simply that before that the trading week even starts, you need to actually take the time to go through the economic calendar to see what are the big news that will come out and that could have an impact on the market. And so what is important to understand is that essentially, right, you want to go day by day, and you want to really pay attention only to the most important things, right? And normally they are between 0 to 2 important things per week. Okay, so you need to exclude a lot of things, right? Because otherwise you will just always constantly have to look at the markets for things that will not really have a big impact at the end of the day. So you really want to focus only on the most important events. And the idea, right, is to actually correlate your trades with the timing of these events, right? So let me give you guys an example. So as I'm recording this video, we are Tuesday morning, and essentially, right, this week I will put the calendar on the screen. As you guys can see, we have, so let's go day by day, right? So first of all, we have Sunday where we didn't have anything. Monday, we didn't have much as well. Tuesday, we don't have much. We have some news related to the election in the US, right? So we will have to wait and see if this really impacts the market or not. Sometimes it does, sometimes it doesn't. So we will just have to be patient and see if there's anything going on the markets. Then after that, Wednesday, nothing. Thursday comes in, and that will be the most important day where we will have the inflation numbers for the US. And then Friday should be a pretty slow day as we have a few bank holidays. And so for this week, right, again, I'm just using this as an example for the video. The most important day by far will be Thursday morning, where, as I said, we will have the CPI for the US. And so essentially what that means is that at least 1 or 2 days before the event, I will not take any trade on the market. And the reason why is simply because you need to think and you need to act as if you were a professional trader, right? So ask yourself the question, do you really think that a professional trader is going to take, let's say, a big position 1 or 2 days before one of the most important events of the month, which is the inflation numbers? Well, of course not, right? They are going to wait for the numbers to come out. They're going to evaluate the situation, and then they will make a decision based on that. Okay, and so it's really important to understand that before these really big news events, or 1 or 2 days before, I will not want to jump into a trade because it would be just a bit too risky to be involved in the trade. The news comes out, the market goes into the opposite direction, and I take a unnecessary loss because I should not even have been in this trade in the first place since we had this big event coming up. So that is really, really important to understand. And so every single week, if you do just this little, this little routine, let's say, well, it's going to be a lot easier to actually figure out, okay, where you should be trading and where you should not be trading, right? So as I just said, I'm probably not going to be trading today and tomorrow because on Thursday we have CPI, and then on Friday we also noticed that there were some bank holidays. So I am also not going to be trading during this day because the volatility and the trustable factor of the moves that we could get on this day would be a lot less, so it would not really be interesting. And so just by doing this little thing right here, it actually helps me to stay away from the markets, right, as much as possible. I know that this sounds a bit weird because you would think that you want to be on the markets as much as possible to catch as many opportunities as you can, right? But trading is really not about that, guys. And this will, be another point that I want to explain in this video. But trading is really not about just catching as many trades as possible. It's only about finding the best trades and actually acting on them, right? But at the same time, not getting caught up on just the ups and downs, right, of every single days, because it's just really not the best way to work about that. So this was the first point. The second point is what I just started to explain, which means that you actually have to be very selective about your trades, and you should not trade every single day, even if you have a short time frame horizon, right? Now, I'm personally more of a swing trader that works over the medium to long term, so I'm not really into day trading and all of these things. But even if you are, as I said, you should not be trading every single day, simply because there are not amazing opportunities every single day, right? Otherwise, everyone would make a lot of money with trading, and everyone would do it because it would just be a lot easier, right? So really good and high probable opportunities are quite rare on the market, and that is something that you really have to understand and accept as an information. You're not always going to get amazing trades, and so what that means is that you actually have to reduce the amount of trades that you take in order to increase what we call the performance metrics, which means the win rate and the risk to reward ratio. And so if you decrease the amount of trades that you take and you only focus on really the best of the best of the best opportunities, then you will have, well, a better win rate and a better risk to reward ratio. And that is how you will be able to optimize your results over the medium to long term. If you take just too many trades, these performance metrics will actually decrease. This is what I've found over time with my own experience, and it's not really going to help you grow your account, okay? And so the only way to really speed up the growth of a trading account is either to have more capital or to simply use more risk on your trades, okay? But there are no magical strategies, and surely, right, the fact of taking more trades is not going to help you grow your account faster. I'm mentioning this right now because I know that a lot of people who are just getting into trading have this false belief where if they take more trades, they will grow their account faster and they will be able eventually to make a lot of money with trading. But it's really not how it works. It's actually the opposite, and that is the reason why this point is so important. So the next time that you actually come across what you think is a good trade, well, take a step back and ask yourself the question: is this really a good trade? Is this really an amazing opportunity where I have a pretty good percentage of probabilities to win the trade and a pretty good risk reward ratio, right? Like, is this really something that I'm willing to risk my money on, or is this something that, you know what, is maybe not that worth it to take, and then you just move on to something else, right? And this will probably save you a lot of headaches and a lot of losing trades as well. And the third point that I wanted to talk about in this video is actually how to set up the trades that you take on the markets themselves, in the sense of where to get in and where to get out, okay? Now, first of all, what you guys have to understand is that the best way to go about trading by far, okay, is to use fundamental and technical analysis and merge them together. So essentially, right, fundamentals give you the direction that you think that the market is going to evolve, and then technical analysis give you the timing aspect of the trade, which means when to actually get in the trade, right? And so if you have a fundamental idea which you want to actually contextualize on the markets, right? Well, the first question that you need to answer is, when is this fundamental idea, right, going to play out? And so the answer is actually fairly simple, is simply when we actually get a breakout on the market. So when the price gets above, most of the time, a pretty big level, or when we actually have a change in terms of the trend, for example, then the fundamental idea is most likely starting to play out, and that is a pretty good moment most of the time to actually get in the position, okay? So that is for the entry. And now in terms of getting out of the trade, right, let's talk about the stop loss. So the stop loss has to be under most of the major obstacles that you have for this trade. So let's say that you get the breakout of a horizontal level, for example, well, then the stop loss needs to be, of course, under this level, and ideally under a pretty important low, probably under a trend line, under moving averages and stuff like that, right? So the stop loss really needs to have some room for it to play out, right? And a lot of people, again, make this mistake of using a very small stop loss because they want to have just really big risk reward ratios, and it's honestly, guys, not really optimal to work like that, simply because it's going to decrease a lot your win rate, so you will get massive drawdowns and stuff like that, and it's going to be just a lot harder to be consistent on the market. So you want to actually have a pretty large stop loss. Again, not many people will tell you this, right? Most people will tell you the opposite, but that is what I've learned from my experience, and that is what really works for me the best when it comes to the system that I use. So I want to have a big enough stop loss to actually protect me and not take me out, even if the trade is still technically valid. And that is really important to understand, right? I don't want to be taken out of the trade if it is still valid and if there is still a good probability for it to continue in my direction. So I need to use a stop that is big enough to actually let enough room for the market to breathe and for it to continue eventually in the way that I want to. Okay, so that is for the stop loss. And the last point here is the target, so the take profit, where to actually close your trade with a profit. And the answer to this, I would say, is fairly simple. So again, what you have to do is look at your fundamental idea, and then you need to essentially judge this fundamental idea in terms of how important it actually is. So let's say that you have a really big fundamental idea, right? Like something major, for example, in the last couple of years, right? We've seen COVID, we've seen the war in Ukraine, right? So these are just some of the things that come up to my mind. We've seen major decrease in terms of interest rate and then major hikes in terms of interest rate as well. So some of these big fundamental ideas, right, are pretty well enormous, as I said, and they tend to have a pretty big impact on the market over the medium to long term. And so what that means is that if this is what you are trading, then normally, right, and logically, the target for these trades would be quite high, and it would take a bigger amount of time to actually get there, right? So you actually have to look at your fundamental idea and judge how important is it to actually then be able to see which of the big upcoming levels the market could eventually hit, and then maybe either take a pause or reverse, for example, right? So if we look at the other way around, right? So if you have a very small fundamental idea, then it doesn't really make sense to shoot for the biggest level possible, right? So you really need to judge this and then try to essentially, as I said, contextualize this on the market. And of course, it takes some experience to be able to do this correctly, but over time you get better, you improve, and that's part of the learning process, right? And that is really how you get better results. So guys, as I said, right, these three things are extremely important. They are all things that I do within my trading and that I pay close attention at. And I'm telling you, if you literally implement them right away into your trading, you will see a lot of improvement. Your results will get better and you will thank me later, right? It's really as simple as that. And as always, guys, I like to make my free content better than other people's paid stuff, right? So what that means is that I'm trying to create the best free content possible for you guys to understand how amazing the coaching program actually is and how much value we actually have in there, right? So if you learn a lot from these videos, well, I would say that you can probably consider joining us and just working with us, because you'll see that it will just skyrocket your understanding of the markets and overall just change your trading for the better. All right. Now guys, for the time being, right, I hope that you enjoyed the video. If you did, please leave a like on it and you can share it around as well. And on that, take care, trade with care, manage your money well, and I will see you in my next video. Bye bye.